Hi everyone, this is Da Chai. I'm at the University Library right now. If you guys hear students talking in the background, excuse them, sorry about that. Okay, so I just want to take a look at the Tesla's Inc. Q4 June 26, 2022 financial statement real quick. I want to take a look at the accumulated deficit. Okay, so Tesla reported on their balance sheet for December 31st, 21. Their retained earnings is this is going to be in millions. Okay, so 331. Right. So if we're looking at retained earnings, retained earnings is revenues minus expense minus dividends. Right. Let's look at last year's. What they reported last year. They reported 5,399 in deficits. Right. So let's take a closer look at what we can do about that. All right. So on January 1st, right, as the balance of what they got in their balance for January 1st, 2021, right? So their balance was 5,188, right? So that's their balance showing on January 1st, right? So if you want to look at the company's objective, right? So we what we want to do is reduce accumulated deficit, right? So if for the reporting for 2022, right? So how are we going to do that? So we want to look at the income statement. So that's revenues, right? Less expense, and that will give us net income. So we want to increase revenues and we want to reduce expense. Okay, so all right, so revenues reported for the 2021 year is 44,125, right? So you can see all the increases through the past 3 years here, moving up each year, so that's good. So what we want to do is we want to increase resources to automotive sales. So this is where all of our money is going to be coming in, so let's give them resources to do that. Now, so revenues, right? So cost of revenues. At the same time, we reported 32,415 for cost of revenues, and for the past 3 years, cost of revenues was going up too. So we need to increase, right, cost of revenues. We need to question that increase. We need to question the cost, right? Question the increase, right, in cost of revenues and its process efficiency. Okay, because it keeps going up for the past 3 years. So if we could do something about that, well, we need to do something about that. That's not a question. Okay, I mean, that's not an option, right? So we need to look into that. Now, so operating expense, we skyrocket on operating expense too. So in 2020, 2019, it was kind of steady, but in 2021, we skyrocket. We reported 4,517 in expenses for SG&A. Okay, so we don't want to do that. Now, so the deficit, right? Accumulated deficit. So this is what we got here: retained earnings, revenues minus expense, right? Minus dividends. So if we could increase revenues and we could reduce expense, it'll give us a net income. Okay, so a net income is gonna drive our retained earnings. Okay, thank you.